What is good, people? I am officially back now, and not only am I back, but the markets are also bouncing back with me. Obviously, we've seen this in a very choppy dynamic over the last couple of weeks that I've been away. I've not been keeping up to it, up to my standards with it previously, so my portfolio has been bouncing up and down, but now I'm officially settled and I'm back. And today we are looking at Robinhood. This is a very, very hot stock right now for multiple reasons. And we are going to be getting into this stock in depth in this video, going over whether or not this is a good stock to be holding for the remainder of this year going into the next. So before we look at whether or not it's a good time to be buying a stock, we need to understand where the market is in general. And right now, fear and greed is at 51, indicating it's very neutral. The Shiller's PE is all the way up at 39 now, which is really, really high, as earnings aren't really as good as we would like to see them. And the stock prices are obviously increasing. Now, we have seen this in a significant uptrend over the last 5 years and 10 years on this chart. So it is clear to see that this is going to continue. So it is a cause for concern, as we are massively above the mean of 17.28 at 39 currently, but it's something in which is to be expected at this point. So Robinhood stock soared 16% Monday on news of S&P 500 inclusion. Watch these key price levels. And the key takeaways from this article is Robinhood shares jumped Monday, which I've just read, obviously. The price broke out above a falling wedge pattern on Monday, indicating a continuation of the stock's longer-term uptrend. Doing a pattern analysis predicts a potential bullish price target of around $230 and indicates a new move higher could last until December this year. And during pullbacks in the stock, investors should watch important support levels on Robinhood's chart near $100, $78, and $67. Now, obviously, in this video, we're going to be going over my price targets for this stock. We're going to be going over my intrinsic value and their financial health to help us understand where exactly this stock should be heading intrinsically. But it's good to see that there are price targets of $240, which is way up here, which is going to be another probably around a 50% gain. So what on earth are the people in power doing about Robinhood right now? Well, on Capital Trades here, we can see that ever since around March this year, we've seen consistent buy-ins from both Republicans and Democrats. Prior to this, there was a lot of selling going on within Robinhood, but now it looks to be as if there is a lot of hype within the power, which is exactly what we would like to see within a stock like Robinhood, being as it does have financial backing. That's not really what I wanted to say, but I've said it now. Anyway, looking here on Robinhood on MSN Money, we can see that a price prediction over the next 90 days gives a price range between $159 and $21. Obviously, 21 is incredibly low, and I think that is just a bit stupid. Looking here on an analyst recommendation, the general consensus comes in at a buy based off of 23 analysts, with 10 at a strong buy, 4 at a buy, 7 at a hold, 0 at a sell, and 2 are actually putting this at a strong sell currently. Looking on Yahoo Finance here, we can see that this company, Robinhood, comes in with a significant surprise rate consistently, with the mean of that actually being, when I can find it, at 16.67% quarter over quarter, and they are expected to grow 11.9% over the next year. So with this data, what can we really see for Robinhood's intrinsic value? Well, before we get onto their intrinsic value, let's just quickly go over some of their quick financial stats. So their retention rate is currently at 43% every quarter. That's a mean, of course, and that is incredibly strong. Their liquidity ratio, which is their cash to debt ratio, is at 1.41, which is incredibly strong, with it decreasing over recent quarters, but it is still positive. Therefore, I'm happy with that. Their free cash flow is relatively consistently increasing, which is obviously, again, really ideal, with the mean obviously being in the positive as well. Looking on a 365-day exponential chart here, we can see that they are now just above this trend line, indicating that we should really expect it to fall back towards this trend line, or the trend line should meet up with this at some point. The volume is spiking nicely, with the price indicating price is actually somewhat supported, and I've lost it now, but looking at the normalized distribution here, we can see over the last 365 days, the probability of a positive day is at 59% for this stock, and a negative day is at 31%. Now, that is incredibly strong in my opinion. That's typically on the higher end of what you would normally see on something like this. So looking here at the intrinsic valuation of Robinhood. So this is Graham's formula, and this is currently pricing this stock to be a sell. Looking on the bullish side here, we have an intrinsic value of only $75 with the current price at $114 as of recording this. Even with the margin of safety, of course, it's going to be a strong sell. And going to the bearish side, we have an intrinsic value of $42. So obviously right now, Graham's formula isn't too happy with this stock. Looking at Peter Lynch's valuation here, this is also a really bad score, giving us a score of it being overvalued. Now, this is my formula in which I have essentially compiled loads of information for. So looking here on the intrinsic value for my formula, this comes in at $91 with an acceptable buy price of near 70. So it's fair to say that this certainly does look to be overvalued for this year's growth. However, all of this is just accounting for this year's growth. If you're more long term, then it's fair to say that could also be almost disregarded. Sorry, I've completely lost my train of thought because I was getting a phone call. But yeah, like I was saying, if you are looking more long term, then this could be disregarded, as earnings will only just start to compound over time and it will become less apparent. And to be fair, where that is visible is in this discounted free cash flow analysis. So on a 9-year basis, this stock should be worth $335 just based off of their compounding free cash flow. But for this year, it should only be worth $37, which is obviously massively below where the current price is at $114, with the 3-year growth target coming in at $111, which is closer to where we are. So you could say that on a cash flow basis, a free cash flow basis, we are 3 years ahead of the current price. So Robinhood short term certainly looks to be overvalued. However, does that mean to say that you should sell right now? Well, probably not. As we saw in that article earlier on, these candles are forming very bullish patterns currently, and it certainly looks to be as if we are set into a really nice position just for momentum essentially. So looking on the day chart here, we can see that we are well above the 50, the 100, the 150, and the 200-day EMA, and not only that, but we are actually also in a bullish crossover where the 50-day EMA crosses over the 100-day. It's essentially a long-term moving average convergence and divergence, which indicates the momentum is on this stock side. There is some nice fair value gaps actually forming within this current price structure. I haven't marked any out recently because I just haven't, to be honest, and I can't really see too many apart from a few in the negative direction which were actually hit and fallen back down to. But right now it looks to be set up in a nice position. Looking at price targets from around about here, there was a 40% gain, and if we now move on to Bollinger Bands, we can see that the price is currently, well, the stock is currently overbought but barely. Typically we would like to see this 20-day simple moving average start to rise up as the price closes off in towards this simple moving average, and then from there we would expect the price to continue to bounce up, or if it falls through the 20-day SMA like we have seen previously, it will fall back down. So according to Fibonacci bands, we can actually see that there is a significant level of resistance where the stock currently is. It's just closed below this as of recording, so it depends where the day will end realistically, but that's not ideal. But I don't think it's the end of the world, because that is basically an all-time high. It's a close of an all-time high, and to see it close above that 2 days in a row would be quite unusual. So today we are obviously seeing a lot of selling pressure because the stock jumped up so significantly yesterday due to this S&P 500 inclusion news. So it's fair to say we are expecting it to sell off today. But again, if you're looking towards December, this could just still have a run from here. I'm not saying it will. That is certainly not financial advice, but looking at the upwards trajectory of this stock currently, it's certainly within the realm of possibility. So not only is the chart looking nice for Robinhood, but the macros could potentially also be heading in the direction in Robinhood's favor, is what I'm trying to say. This is because we are, of course, expecting potential Fed cuts in the coming weeks and months from the Fed. And why will this help Robinhood? Well, it will boost risk appetites. Lower interest rates generally push investors towards riskier assets such as stocks, cryptocurrencies, and options in search for higher returns. And obviously, Robinhood fits into that. There will, of course, be a passive flow from the S&P 500 inclusion. As of yesterday, of course, with this stock being included within that ETF, you will see a lot of money just pour into Robinhood now inherently. However, Robinhood will also see some hurt from interest rates dropping, such as the interest income shrinkage. Robinhood makes significant revenue from cash held in customer accounts, and obviously when you're gaining less interest on that, your revenue is going to start to fall lower and lower. But obviously the idea of interest rates is they're only high when inflation is high, but with US politics currently yo-yoing up and down, who really knows where inflation and interest rates really do align. So short-term, Robinhood will certainly benefit from Fed cuts just because of hype cycles and news, but long-term it could actually have a slight impact on their revenue going forward, but how much is hard to really say. So that has been Robinhood. I hope this has been useful. Of course, this is not financial advice and is not to be taken as such. This is all just my own research and my own personal opinion. Let me know what you think about Robinhood in the comments below. Is it currently a buy, a sell, a hold? I'll be really interested to know your opinion. Now, for my long-term viewers, I am now somewhat officially back. I might be on and off for a few weeks, but I will try and be consistent by daily uploads, but we shall see how that goes. With that being said, I hope you have enjoyed, and I will see you for the next video.